Hello everyone. So welcome to yet another recording of your CMA Mentor. We are going through a question series and this is day 6 of question series. Today we are going to do a sum of SPMBV paper 20A and this is December 2019 question of syllabus 2060. It is question number 8B. Okay, this is one of the most important question of mergers and acquisition, and many times you have seen these questions appearing in the exam. Only they change the number and the names of the acquirer and the target company, and they give the same questions in the examination. So it is one of the most important question of merger and acquisition. So let's start with this question. Okay, the following information is provided related to the acquiring company firm Mask Limited and the target firm name acquiring firm named Mark Limited and the target firm named Mask Limited. Okay, there are basically two firms where Mark Limited is the acquirer and the Mask Limited is the target firm. Okay, it's both of them's PAT is given, that is profit after tax, number of shares outstanding is given, and PE ratio is given. First question is what is a swap ratio based on current market price? So basically, firstly you have to calculate current market price, whose formula is earning price per. What is market price? Basically, you know the formula of PE ratio. PE ratio is basically market price per share by earning price per share. So if we have EPS and if we have PE ratio, then we can easily calculate the market price per share. So firstly, PE ratio is given in the question and EPS you have to calculate. You are very much aware how to calculate EPS. EPS is basically profit after tax by number of shares outstanding. So both the data are given in the question. For now, for each of the firm, that is Mask Limited and the Mark Limited, you have to calculate firstly the EPS, which will be basically earning price per share is 2000 and the number of shares outstanding is 200. So basically for Mark Limited it will be rupees 10. Secondly, for Mask Limited, the earning price per share is 400 and the number of shares outstanding is 100. So the earning price per share is rupees 4. Now to calculate market price per share, we'll multiply the PE ratio with the earning price per share. PE ratio for the first one, that is Mark Limited, is 10. EPS you have calculated above. So market price per share will be rupees 100. For the second one, PE ratio is, that is Mask Limited, is 5. Market price you have calculated above. So the market price comes to rupees 20. Okay, done with the first part. The second part is you have to calculate EPS after acquisition. So how to calculate EPS after acquisition? It is basically calculated by dividing the total PAT, okay, of both Mark and Mask Limited by number of shares outstanding after acquisition. Okay, I think so we have left a thing, that is how to calculate swap ratio using market price. The first part was that it will be basically how to calculate it, the market price per share of the target company, that is Mask, by the market price per share of the acquired company, that is Mark Limited, which comes to 0.2. Okay, EPS after merger, okay, I was explaining, it will be profit after tax of both the firms by the number of shares outstanding after acquisition. So how will you calculate this? It will be calculated by taking the number of shares of the acquiring company, that is Mark Limited, which was given as 200 lakh, plus the number of shares of Mark Limited was 100 and the swap ratio was 0.2. So basically we'll multiply, for the target company we'll multiply the number of shares into the swap ratio. So the total number of shares outstanding comes to 220 lakhs. Okay, and the total profit of both the firms is 2400. So we basically, for calculating EPS, will divide the total PAT, that was 2400, and the number of shares we have calculated 220. So the answer comes to rupees 10.91. The third part is that you have to calculate the expected market price of Mark Limited after acquisition. The question is telling that the PE ratio will remain the same, that is 10. Okay, so how will you calculate market price after acquisition? It will be basically the earning price after acquisition into number of shares after acquisition. Okay, so the earning price we have calculated above, which came to 10.91, and I'm sorry, it will be PE ratio. We are calculating market price now, so it will be PE ratio. PE ratio, it is saying in the question that for Mark Limited it will be same, that is 10 times. So the market price comes to 109.10. Okay. The fourth part in the question is that you have to determine the market value of the merged firm. So how will you calculate this? It will be calculated by multiplying the market price per share after acquisition into the number of shares after acquisition. Okay, both of the data we have. The market price per share after acquisition we have already calculated above, that comes to 109.10, and the number of shares we have calculated here, that came to 220 lakh. So the market value came to 240.02 crore. Okay, the fifth part I'll explain by myself. The institute has not solved it in a right manner, so I would suggest don't follow this solution, and I'm explaining you how to do the fifth part. So basically in the fifth part you have to calculate the gain or loss after before and after basically you have to calculate gain or loss to the shareholders of both the companies after acquisition. So for this, what you have to do, you have to make two columns. Okay, that is post and pre-acquisition market price. So the pre-acquisition for Mark Limited was given market price. For Mark Limited was given 100, and for Mark Limited it was rupees 20. Post market price for Mark you have calculated here, which came to 109.10. You will write it as it is. Okay. For Mask, what you will do, the market price of Mark into 0.20, that was swap ratio. Okay, 109.10 into 0.2, that is swap ratio. You'll multiply the post market price with the swap ratio to get to the market price of the target company, that is Mask Limited, which comes to 21.80. So basically for Mark Limited it is a loss, because firstly it was 100 rupees pre acquisition the market price, and for post acquisition it became 109.10, so it is loss for it. You'll so show with it in a bracket because it is a loss. For Mask Limited the market price was 20, which became 21.80. So basically for Mask Limited also there's a loss of 1.82 rupees. Okay, now for examination purpose also calculate the market value for market value. Don't leave the answer by only calculating the market price. Calculate the market value and give the final solution. You'll get a exact 7 to 7 by 7 if you do this. Okay, so the number of shares pre-acquisition was 200 for Mark, and for Mask it was 100. You'll multiply by the pre-acquisition market price, and the market value will be 1820 lakh for Mark Limited and 182 lakh for Mask Limited. So how I have calculated this, basically it is market price per share into number of shares. Okay, which give the solution of market value. So this is a very very important question for examination purpose. Please go through this sum. If you practice it one or two times by writing it by yourself, don't only listen to the audio and go in the examination, because at times it happens that you know how to solve, but in the examination you're not able to solve it because the written practice is less. So what I would suggest you, please write and practice so that it will be easy going for you in the examination hall. Okay, so hopefully you liked this video, and if you liked it, please do share, subscribe, and do hit a like button with your like button. Okay, thank you so much.